Bitcoin ETF inflows just pushed 21 Shares chief investment officer to publicly call $100,000 by year-end, even with BTC stuck below 80,000 right now. And look, that is not even the biggest story today. Doge and Shiba Inu just exploded higher, leading the entire altcoin recovery ahead of the Fed decision. The UAE just split with OPEC, oil shot to $103, and Bitcoin got slammed down to 75.8 thousand before bouncing. Polymarket is eyeing a US comeback, with the lone CFTC chair holding the only vote that matters. And the Bank for International Settlements just dropped a 38-page report calling major crypto exchanges shadow banks. Stick around for Story 5. It is the most underrated signal almost nobody is talking about. I am fired up today. Here on Crypto in 60, let us dive in. Quick note before we start. If you want 5 stories like this every morning before markets open, hit subscribe. It takes 2 seconds. Now, let us start with the institutions. According to CoinDesk, 21 Shares chief investment officer just went on record saying Bitcoin can hit $100,000 by year end, and the entire thesis is built on ETF inflows. Now here is the part that matters. BTC is currently trading at 76,350, which means we need a roughly 31% move in the next 8 months. The ETF flow data shows institutional buyers are stepping in even with price stuck below 80,000. And that is the divergence nobody is pricing in. Retail is panicking. Institutions are accumulating. The 21 Shares team is pointing to portfolio allocation as the driver, not narrative. Look, when a regulated asset manager publicly puts a 6-figure target on BTC, that is a signal worth tracking. And while institutions load up on BTC, the meme coins are doing something nobody saw coming. CoinPaper is reporting Doge and Shiba Inu just led the sharpest altcoin recovery of the week, with Doge up 6.2% in the last 24 hours, sitting at 11 cents. And here is where it gets, complicated. Bulls are saying this is the start of meme season rotation, capital flowing out of BTC into high beta plays before the Fed decision. Bears are saying it is a dead cat bounce, a relief rally before another leg down. The on-chain data shows strong capital inflows into both tokens, but liquidation data also shows shorts getting squeezed, which means the move could be mechanical, not organic. And honestly, I do not know which side wins this one. If the Fed signals dovish, Doge could rip another 20%. If they hold hawkish, the squeeze unwinds fast. The next week tells the story. Now, speaking of macro shocks, oil just rewrote the script. Coinatag is reporting the UAE just officially split with OPEC, and oil immediately spiked to $103 a barrel. Bitcoin reacted hard, dropping to 75,800 before bouncing back to 76,600. The technical support sits at 73,600 to 76,400, with RSI at 57 and the 80 to 82,000 resistance still has not broken. Look, this is the macro correlation playing out in real time. Geopolitical risk pushes oil up, dollar strengthens, risk assets sell off. Are you holding through this Fed week or trimming exposure before the announcement? Drop it in the comments. I read every single one. The next 48 hours are critical. And while traders watch the charts, a major prediction market is making a quiet comeback. Decrypt is reporting Polymarket is pushing for a US return, and the entire decision rests on one person. CFTC Chair Michael Selig is the lone commissioner with 4 of 5 seats currently vacant. That means one signature reopens American access to the largest decentralized prediction market in the world. The press release context here matters. Polymarket has been banned from US users since 2022, and they have been quietly building toward this moment ever since. If Selig approves, it sets a precedent for every offshore crypto platform looking to come back onshore. The CFTC has been historically more crypto-friendly than the SEC, and a single chair making this call is unprecedented. The ruling could land in weeks. Now, the final story is the one almost nobody is talking about, and it changes how every exchange operates. Bitso just flagged a 38-page Bank for International Settlements report that officially labels major crypto exchanges as multifunction crypto asset intermediaries. Translation? The biz just called Coinbase, Binance, and every major venue shadow banks. They bundle services that traditional finance separates across banks, brokers, and exchanges, all under one roof, all under minimal oversight. And look, this is the regulatory groundwork that gets cited 2 years from now when capital requirements hit. The BIS does not write reports for fun. When they label a sector, regulators in 50 countries pay attention. The real question is whether you are positioned for what comes next, because by the time the new rules drop, the structure of every exchange you use will change. Bitcoin ETF inflows pushing toward 100,000. Doge and Shiba Inu leading the meme recovery. UAE OPEC split rattling BTC at 76,000. Polymarket one vote away from a US return, and the biz labeling exchanges as shadow banks. This week is the institutional story, the macro story, and the regulation story all colliding at once. This is not financial advice. Always do your own research and never put in more than you can afford to lose. If this saved you an hour of scrolling today, subscribe. That is what I am here for. 5 stories every morning, no fluff. See you tomorrow.